Welcome back. You're tuned in to Editors Roundtable here on CNBC-TV18. Well, we're still in conversation with Nilesh Shah of Envision Capital. Nilesh, the other big theme, that played out very well in the last 18 to 24 months is the capital marketplace. Whether you look at stock exchanges or you look at, brokerage firms, all of them, they rallied big time. Now the problem is volumes have dried up a little bit. The regulator obviously has tightened their grip as well. And there's fear that there's further tightening that's coming. And that's why these stocks have corrected. Problem is, even not for the correction, they're not very, very cheap. But the longer time frame, some of these companies still could potentially look attractive. What's your take?
No, clearly, Nigel, I think the short term looks very challenging. I think they are going to basically face a lot of challenges for the next maybe at least 4 to 6 quarters. I think it's a new reality. I mean, a lot of them have grown on the back of rising volumes. You're not going to see those kind of volumes there, especially if the proposed changes which are being talked about, if they really become a reality and get implemented, I think it will take a toll on volumes. What that will also mean is that the investor or the trader's interest will shift to cash markets, where the commissions can be more, the brokerage rates will be more. But it's going to be a time period. This basically transition will take 4 to 6 quarters. Okay. So I think it'll be good post that, but there is going to be some pain for the next few quarters or so. And I think firms which make that transition will emerge to be the eventual winners, because the markets still are underpenetrated. I still think in terms of potential, the whole SIP culture, the growth of mutual funds, the growth of investor universe, I think all of that has yet a long way to go. But in the intervening period, they definitely have a lot of headwinds in front of them.
Okay. Nilesh, any new theme or any new company that you've looked at or exploring among any of the recent IPOs which have come through? Anything that stands out for you?
So I think urban company surely is, an interesting kind of a business. But I think apart from that, company which went IPO about a year back, a business called Interact. And we own it. I think that's a very interesting business. I mean, I think at the surface, PEBs look like a commodity because there are many players doing it. But the bottom line is that most businesses which want to scale up immediately in manufacturing, who want to create these mega factories, if you want to have a faster or quicker way to do it, you need to have pre-engineered buildings. I think that's a reality. And that, I think, is a space which looks very, very exciting. Obviously, over the very long term, when you have prefab buildings even coming into very large buildings, commercial buildings, residential buildings, obviously those are the optionalities sitting out there. But I think for now, if you're bullish on Indian manufacturing, Indian warehousing, I think that's an interesting space to be in.
Sure. Nilesh, next week is going to be quite crucial from a global perspective. We have the Fed meet as well. You have a slightly different view that if there are rate cuts in the US, it's actually going to be negative for equities globally and for India as well. Take us through that.
So, Nimish, it's a bit of a slightly different view because in the past, whenever, the Fed has started to cut rates,
everybody seems to get excited.
It's a very exciting period because there's a crisis all around.
True.
Right? I mean, if I go back 9/11 and then GFC and taper tantrum and COVID, and these were pretty much almost like existential crisis. Today, there's no existential crisis, so to say. Yes, there are headwinds, but it's not a crisis. And in that, if the Fed is going to start cutting rate, what does it signal? The economy is cooling off, jobs growth is not happening, and then on top of that, there is basically this whole thing around inflation. So it's more about concern around economic growth rather than anything else. And equity markets love growth. And if you have growth which is kind of becoming a challenge as far as the US Fed goes, I'm not too sure whether rate cut is a great signal. So I think this time, truly, it could be different. We'll have to watch out.
For the US market, it's going to be interesting because that's been the mother market has done very well. S&P 500 things, it trades at around 27 times, right? It's been running along. Earnings have been okay. Now, the problem is if there is a rate cut, and then after this, in the next quarter, you're going to see the impact of these higher tariffs because still now the importers are taking the hit. Next, the consumer will take the hit. Besides that, even the dollar index has weakened. So it's a double whammy for them. So the economy is going to be running into rough weather. So the mother market takes a pause. I'll be wondering how the other markets will react. The only good news for India is we have underperformed in the last 1 year by a large margin. So maybe that gives us some kind of cushion, and our domestic economy is expected to recover. So I think that's something that will hold us in good stead.
Absolutely.
So when is the recovery starting? When is the index first hitting all-time highs? Then where does it go from there?
Well, that's barely, I think, I don't know exact, but it's probably 2, 3, 4% away, right? So I don't think
Some
that's
1,200 points away
Sorry?
from 1,200 points on the
1,200,
Nifty.
so that's basically what, 4, 5%. So that's not a, that's honestly not a big
वो
deal.
तो हो ही जाएगा.
I think so, yes, yes.
So
I'd
we
like-
do what's in your hands, right? You're continuing your SIPs and all, right? Besides covering it.
No, that always. But speaking of that, any other themes, I mean, in terms of just a portfolio call, what would your advice be? We've spoken about IT, you've given some other interesting manufacturing idea. Defense, for instance, it never goes out of fashion, right? There could be a period of lull, but then suddenly the stocks roar back to life. Anything else?
So I think clearly not from an immediate perspective, but I still think from the next 3 to 5 years, it's going to be the 3 Ds.
Okay.
The first one is around digitization. Digitization, data, all of that in one basket. The second is clearly defense, undoubtedly. I think for the next 3 to 5 years, they have a massive runway. And lastly is decarbonization. I think that still has got a runway. And obviously earlier we were looking more like renewable energy and all of that. But this whole EV space is looking very interesting. The two-wheeler guys seem to be kind of stabilizing. That space seems to be stabilizing.
I was just coming to that. Do you think Ola has turned a corner?
I won't comment on an individual. No, I think turning corners, I still think is about at least 2 years away. I still think we have another 8 to 10 quarters of them kind of being actually profitable. Because they made huge investments. There's going to be a huge amount of depreciation charge. They're going to keep investing in R&D. But I still think that there's going to be value migration, a shift away from conventional to essentially the electric. And these are guys who can grow at 30, 40, 50% CAGR. And maybe in another 8 to 10 quarters, you would actually see them starting to kind of churn out serious cash flows. But markets will start to kind of price a lot of that in advance. So I think that's one interesting space to watch out for.
The 3 Ds. So decarbonization, defense, and digital.
Digital.
There you go. That's the formula on Nigel's birthday. The 3 Ds.
Drinks.
I didn't even go there. It was him. I think that's a good note to call it a day on. Thank you so much, Nilesh, for joining in. Always so good when you drop in in person. So we really look forward to these sessions. Thanks so much. And we'll take our viewers' leave as well. Thanks for watching. Have a great evening. Keep watching all the news and updates right here on CNBC TV18. See you with the markets again on Monday morning.